Dustin Tibbetts, financial advisor with jazzwealth.com. I hope you'll check us out. So let's talk about the flavor of the week. Well, actually, the flavor of the last couple months, actually. Advanced micro devices. In case you've been under a rock and you've never used a computer before, these are the guys that make the microprocessors that go inside of the computers. Now, if you've ever bought a computer, you've likely been in an aisle of Best Buy comparing the actual chips between Intel and AMD. You tried to sound smart when the sales guy came by, but really we didn't know what was going on. Well, that's these guys. Now, while you may know them for their processors, the company was actually really smart here. They were smart enough to know that the PC business is dying. Well, unless you're a gamer, a miner of cryptocurrencies, or an AI developer for a self-driving car. See, they've grabbed a lot of attention lately for being able to reposition themselves from really a discount chip maker to more of a premium provider in these new segments. Now, they've also been given kudos for some strong partnerships with Microsoft, Amazon, and even smarter of them, some Chinese companies like Tencent, Baidu, and JD.com. Very, very, very smart on their part. All right, now let's talk about what really, really matters, the only thing you're really here interested in, and that would be the money, right? Let's talk about the money. Now, earnings for them have been on fire since late 2016. In fact, they've beat expectations every quarter in 2016. The last 4 quarters, they beat expectations by an average of 31%. That's just a fancy way of saying they did better than what Wall Street was expecting them to do. Now, last year, the company put up $5.3 billion in revenue, and they break their revenues into 2 categories. They've got computing and graphics, which grew at 54% last year, and then they've got this enterprise semi-custom segment, which, although was flat last year, this is new for them. They've been growing it more and more, and it really could be the segment that shocks people going forward. Have you seen how many companies are using their new EPYC server microprocessors? Huh? Say that 3 times fast. All right, now to the share price. Every active participant has seen the recent blast off in the price of the shares, and with that kind of earnings, who can blame them, right? The company's killing it. So it's likely that you want a piece of this rocket ship, but should you jump in? Well, if you're a technical trader, they would argue that prices have moved a little too far too fast as of this recording, and that they should calm down before it's time to dive in. Fundamental traders, those who use financial performance of the company to make their investment decisions, they would also argue that the stock is currently a little overvalued. Really, a popular metric used for this fundamental is called a PE ratio. It's called the price to earnings ratio, which for AMD has an average of about 54.3. Now, currently they're trading at about 74.5, so obviously a little expensive. Now, despite the charts and the fundamentals, maybe you're saying, I don't know, I think it's a good idea. I want to consider an AMD investment or a trade. So let's take a look at a few things to see if it's a good idea. Number 1, the company has and continues to diversify away from the slowing PC business. In fact, so much so, Sony and Microsoft gaming systems, the ones, they use AMD technologies. If you add blockchain industry to this mix, they've been raving about the new Vega and Radeon RX Vega processors just released last quarter. Got that one right, all right. Now, number 2, while Intel remains the dominant force in the chip space, AMD has been stealing a little of their thunder lately, and Wall Street has started to realize all the great stuff that I've been sharing with you in this video. So that's good as well. Number 3, they know their market. They saw the weakness in the PC business, and really they've only just begun to move into other enterprise or semi-custom type categories, which so far has been a great success. Their partnerships with Baidu, Tencent, and JD.com that I mentioned a minute ago just show how important they understand China is to their future. I think that was a smart move. Okay, now the bad stuff. Let's talk about the bad stuff. Got to give them the bad stuff. The personal PC business still represents a big chunk of their overall revenues, which if Intel continues to do well or compete even better, it's going to force AMD to do what they've always done and just lower the prices of their processors, which could hurt their gross margins. Number 2, there's something that Wall Street likes to call customer concentration, and they don't like this. This is just a fancy way of saying that they have only a few customers that make up the bulk of their overall revenues. Nobody likes to see that. If they lose one customer, it could drastically hurt their bottom line, and of course we don't want that. So here's the deal. Microsoft, Sony, and HP currently account for 59% of their total revenues. Not good. And lastly, debt. Just like we all like to keep our personal dough straight, not have too much debt, well, we like to see companies that keep their dough straight as well. We like to invest in those companies that don't take on too much debt. Now, though AMD deserves some credit for craftily sort of working to reduce the debt on their balance sheets, they still remain with about $1.3 billion in debt. Also, anytime a business moves into a new category that we talked about earlier, you got to expect that this is going to cost some money. It's going to be a drain, a bit of a financial drag on their overall balance sheet until they get things up and set to be able to compete with the likes of Intel and Nvidia. Well, there you have it. I'll let you make your own investing decisions. I can't possibly remember much more to say about this company. Let me know what you think. Are you interested in AMD now, as of this recording, or would you actually like to take a step further and let it calm down and maybe buy it at a discounted price? Let me know what you think in the comments below, and also let me know, was this worth it? Was this type of video interesting to you, or should we get back to other stuff as usual? Hey, if you like to invest in stuff and you're just not sure what in the world I was talking about for the last few minutes, go to jazzwealth.com. That's where we actually do the investing for you. We do all this geeky stuff in the background and make sure you're on the right track for your retirement, your long-term goals. If you have a Roth IRA, traditional IRA, or you're just getting started and you want to set something up, check us out at jazzwealth.com. Thanks.